Afternoon, guys. Hope everybody's in good spirits. Now, this is a chart you'll probably hear a lot of people talking about on the financial channels today. It's quite a bit of a landmark day, because on the 9th of October 2007, the US stock markets hit their all-time high. Okay. So we are 2 years on, and this is the chart mapping those 2 years. I've got the Fibonacci retracement level on this. So this is the long-term Fibonacci retracement level that people are definitely looking at. And as you can see, we're back over the 38.2% Fibonacci line. We got through there in the middle of August, and that sell-off we had at the back end of September, before retracing those losses this week. So Friday's non-farm payrolls actually took us just below that long-term Fibonacci line, but obviously we only stayed below there for literally I think it was probably an hour. So immediately after that non-farm payrolls data, we spiked lower, and then pretty much an hour later we'd retraced the whole move. So we did dip below this major Fibonacci line for an hour, but that's all. And now we're 5% higher, over 5% higher now, just off this week's gains. So quite interesting. I mean, obviously the next long-term fib level comes in at 1126, okay, and that's the 50% Fibonacci line. So the argument kind of goes, people are talking about stocks being overvalued at these prices, but let's be honest, let's have a look at this chart. We're still a long way off the 50% retracement level, so we're not even halfway back in terms of the overall losses we've seen from the 18 months spanning from the October 07 to March 09. Okay, so I just think on this chart it certainly doesn't look like we're overvalued at all. But just a bit of a landmark day, so people will be talking about this on the TV today, so I just thought it'd be interesting to show you the chart. So we're 2 years on from the all-time highs. The all-time high on our market, E-mini S&P, was 1586.75. So we're a fair way off that. Right, let's have a look at the shorter term. This is the 4-hour chart, so I'm looking at, I just wanted to show you, a chart that's got the high of the year on it. So, of course, that was on the 23rd of September. We hit the high of the year. That was immediately following the FOMC statement on Wednesday the 23rd. We spiked higher. We set a new high at 1075.75. Since that moment, it was pretty much 2 weeks of losses into the low that we posted after the non-farm payrolls, which was down here on the 2nd of October. So, this week we've retraced a huge portion, and we're not far off back to the full retracement. Actually, I've just noticed I've got my... this is a different Fibonacci series, actually, sorry, ignore me. So we're not far off, the highs of the year. I mean, yesterday we got over an important resistance level, which was at 1065.75. That was the high from 29th of September. And, quite clearly on this chart, that was the sort of final decent resistance level before the high of the year. So we did get through that briefly yesterday. And we have already got through it this morning, although we have retraced. We touched yesterday's high, 1067.25, where we found good resistance. So a bit of a double top there. So that's certainly our first upside resistance level for today's session. Let me zoom in a little bit more. Let's go to the 1-hour chart, and this is showing this week's performance, and obviously quite a nice trend higher. We have moved sideways yesterday and now overnight, so we're pretty much trading the levels that we were trading following that move that we saw after the Alcoa results. That was overnight Wednesday stroke Thursday, and we're pretty much trading on exactly those levels now. So we've actually had 48 hours of no movement, which has taken us actually through, and we've kind of broken through this upward trend line that we had been following. Now today is likely to be pretty quiet, guys. There's no earnings reports today. That we have one bit of economic data. It's the US trade balance, which personally I don't think is going to have too much impact. So I think, and due to the fact that it's a bank holiday in the States on Monday, I think the markets are going to be pretty quiet. I think the volumes will be low. I think people will, because we've started Q3 earnings, but it's a bit of a stuttering start because we've only really had Alcoa and PepsiCo who have been of any interest. Alcoa, of course, really good results Wednesday night. PepsiCo, we had results yesterday, before the open yesterday, and they were good on the earnings per share side, but not so good on the revenue side. So a bit of a mix. What really this market needs to push higher from these levels is these earnings reports to be both better than expected on the earnings per share side and on the revenue side. So there's PepsiCo earnings were good, but nothing that's going to give this market further upside from these levels. So really we've got to wait till Tuesday next week to get the earnings season back up and running, because obviously it's a bank holiday on Monday. So I think today and Monday are going to be very, very quiet sessions. So the obvious range we've got here is 1067.25, which was yesterday's high. It's also now today's high, and then the low from yesterday is 1057. Currently my outlook is I can't see us getting out of that range. Okay, that's my current outlook. Of course we've got to wait and see what happens. The S&P is definitely being influenced quite heavily by the dollar movements and also by the oil price. We had big moves in both in the oil market yesterday. We had over a $3.50 range nearly. The lows were down just above $69 and the high yesterday was $72.55. We're currently trading 71.38, having retraced off the highs overnight. The euro dollar is particularly interesting. We got up to 1048.17 yesterday. We got a long-term level at 1048.50. That's the high of the year for the euro dollar. We did retrace those gains overnight, and we're currently sitting really in the middle of yesterday's range. It's at $1.4770. Okay. So we're going to be monitoring these markets, but again I don't think we're going to get too much action today. So unless we do get some new information to drive these markets, some new fundamental news, I think we'll largely stay within this range, this 10-tick range, 1057 up to 1067. Okay, and we're right in the middle of that range as I speak. We did have some Bernanke comments overnight. He was saying that the US Federal Reserve must continue to prop up the economy for an extended period, but can't do so indefinitely for fear of triggering an inflationary surge. Nothing new in that comment. Everybody knows that's the situation. He also said that the accommodative policies will likely be warranted for an extended period. However, as economic recovery takes hold, we will need to tighten monetary policy to prevent the emergence of inflation. So that's pretty much a repeat of the first comment, actually. And nothing new. Everybody knows that. Everybody knows that as the economy recovers, they're going to have to first of all remove quantitative easing, and then secondly start increasing interest rates to control inflation. Everybody is aware that that is the situation, and he's shed no light on the timing of that from those comments, so there's nothing really much in there. Data today then, guys, was trade balance, and that's at 1:30, so in about an hour's time. As I said, it's not a massive market moving figure. Of course we'll be reporting it in full, but expect a quiet day. We know what to do in quiet days. We know to keep our trades to a minimum. We know that our profit targets should be reasonably small. and don't look for huge moves in these markets because they're unlikely to happen. So patience today, guys. Have a good day.